What's the key to building wealth? Multiple income streams. At least, that's what every millionaire will tell you. 65% of them have at least 3 income streams, and nearly a third of them have 5 or more income streams. So, if you're still tied to your day job and you're serious about reaching financial freedom, then ditch the cars, jewelry, and luxuries. Instead, make a decision to look into spending your money on the ultimate status symbols: income-producing assets. In today's video, we're going to talk about 10 assets that are making people rich. But before we begin, if you're new here, make sure to subscribe to our channel and click the bell icon so you get updated every time we post new videos. With that being said, let's dive right in. Number 10. Commodities. Commodities include metals, gold, silver, etc., food, grains, corn, coffee, and sugar, and raw materials, oil, gas, cotton, etc. Commodities are generally capital gains or loss type investment, and you can buy future contracts of any commodity through the future exchanges. If you're a new investor, start small and build your financial education. For example, purchase a silver coin and then watch its value increase or decrease in your daily news. Buying gold and silver coins is very easy to do. If you can buy a loaf of bread, then you can buy gold and silver. Buying other commodities has the same level of ease as paper assets. Number 9. Real estate. Real estate investments either provide cash flow from rental properties or capital gains from buying and selling a property. Tax credits are available for low-income housing, the rehabilitation of historic buildings, and certain other real estate investments. A tax credit is deducted directly from the tax you owe. You get an annual deduction for depreciation also, which is typically a percentage of the value of the property that you can write off as an expense against revenues. Finally, in some countries, the gains from the sale of real estate can be postponed indefinitely, as long as the proceeds are reinvested in other real estate properties. Number 8. Certificates of deposit, or CDs. A certificate of deposit, or CD, is a low-risk financial investment offered by banks. How they work is simple. You loan the bank money for a set amount of time, known as a term length, and you gain interest on the principal during this time. A typical term length is anywhere from 3 months to 5 years. During this time, you can't withdraw your money without taking a penalty hit. But it's pretty much assured that your money is growing at a fixed rate. The interest rate varies on how long you're willing to invest for. The longer you loan money to the bank, though, the more you can earn. Number 7. Bonds. Much like CDs, bonds are like IOUs, except instead of giving it to a bank, you're lending money to the government or corporation. And they work similarly to CDs as well. They are extremely stable. You'll know exactly how much you'll get back when you invest in a bond. You can even choose the amount you want a bond for: 1 year, 2 years, 5 years, etc. They're smaller in their returns, especially when compared with aggressive investments like stocks. If you want to know exactly how much you're getting back, bonds are a great investment. Number 6. Dividend-yielding stocks. Some companies pay out earnings to their shareholders each quarter via dividends. These are also known as blue-chip stocks and tend to be reliable and able to weather most economic downturns. Many investors like to add a few dividend-paying securities via blue-chip stocks in their portfolio to ensure that they receive earnings consistently throughout the year. And while some like to handpick individual shares to invest in, you can get started by investing in index funds that specialize in high-yielding dividends. Number 5. Peer-to-peer lending. Also known as crowd lending, peer-to-peer lending allows you to essentially act like a bank. You loan money to others via a peer-to-peer lending platform such as Lending Club, and later they pay you the money back with interest. Unlike a bank, though, the person seeking the loan doesn't have to deal with the financial background checks or incredibly high interest rates due to things like bad credit history. Peer-to-peer lending isn't without risks, though. In fact, relying on someone with crappy credit to pay back a loan might be one of the riskiest financial investments you make. But if you're willing to devote yourself more to learning about the platform and use money you don't mind losing, it can be a very fruitful financial investment. Number 4, creating your own product. Not only is it low cost, but it's also easily scalable, meaning the sky's the limit for your earning potential when you own a product. And you don't need engineering or carpentry skills to create your own product either. In fact, you probably use products every day that you can create too. Ebooks, online courses, podcasts, webinars, whatever. These digital information products are perfect ways to earn money without sacrificing overhead. They come at a cost though, your time and energy. Not only do you actually have to create the product, you also have to make sure that the product will sell. Number 3, farmland. You don't have to be a farmer to profit off farmland. 39% of all farmland in the United States is rented or leased, so if you can't grow an ear of corn to save your life, you still have a chance to get a little agricultural with your income streams. By purchasing a piece of agricultural real estate, you can then rent out your land to farmers looking to expand their operations. This allows the farmers to maintain their capital for other uses, while you collect monthly or quarterly rent checks. Of course, you can't just buy a random piece of real estate and hope to start growing crops on it. In fact, the land's soil conditions have to be right for commercial crop production, and nearly all farmable real estate is already accounted for. In fact, premier pieces of farmland, like high-quality cropland in the middle of Iowa's Corn Belt, can sell for $10,000 per acre. Number 2, savings accounts or money market savings accounts. Probably the most basic income-producing asset in the world and also one of the least profitable. While these two both pay slightly higher interest rates than a regular old checking account, you're still going to be hard-pressed to make any meaningful income from these ultra-safe choices. Unfortunately, most people never get past this stage in their investment journey. And number 1, franchises. Remember the last time you visited McDonald's and that wonderful conversation you had with the store's owner? Of course you don't, because those stores' owners are never there. They outsource all the day-to-day operations to somebody else, and that turns their franchise purchase into a pretty passive income source. The requirements to starting a franchise varies by brand. McDonald's claims one of the most expensive franchise fees at $45,000, and the initial investment to build or purchase a store ranges between $1 to $2.2 million. Plus, they require you to have a whopping $500,000 of liquid assets. A franchise purchase grants you the right to use a parent's company's trademarks, trade secrets, and proven business plan in exchange for a percentage of the location's profits. Well guys, I hope you liked the video. Did you learn anything new today? Let us know in the comments. And if you haven't subscribed to my channel yet, please do so. With that being said, we'll see you in the next one.